Is a new book that's out, The Great American Tax Dodge, How Spiraling Fraud and Avoidance Are Killing Fairness, Destroying the Income Tax and Costing You. One of its co-authors is James Steele. Good morning. Morning. Thanks for being with us. And the other co-author, Donald Barlett. Tell us what this book is about.
Lou, this is basically is a recitation of how people are cheating on their income taxes and what it really means for most people. And the really disturbing thing is we come up with an estimate of about $300 billion, and we think it's probably conservative. But what that translates it into is people earning less than $75,000 a year. It's every penny in income tax they pay.
With the myriad of potential topics out there, what led you to this one?
We stumbled across a couple of interesting cases where one fellow in a totally separate piece of legislation or litigation said, I don't pay any income taxes. He had a house, a very expensive house in Los Angeles. All members of his family had cars, late model cars, and yet under oath he said, when talked about his tax situation, said he hadn't filed an income tax in many, many years. And we got to wondering, how many people are there out there just like that? And that's basically was the spark that got us interested. We've covered taxes one way or another for maybe 25, 30 years. So we've been following the gradual erosion of enforcement and sort of this ongoing bit of fraud and deception. But that was kind of the trigger that made us ask the question, how much of this is there?
We invite you to join us. 202 is the area code, and Republicans can call us at 624-1111. 624-1115 is the line we set aside for Democrats, and Independents and others can call at 737-6734. Our guests are Donald Barlett and James Steele, the author of this new book, The Great American Tax Dodge. It's about income tax, but it's not about corporate taxes. You said that's a whole separate story. Why did you focus on income
That's taxes? A whole separate issue. Well, because of the individuals. Individuals obviously account for the largest share of tax collections. And the American tax system has rested since the very beginning on self-assessment. People fairly and honestly reported what they made and paid the tax they owed. And during the 50s and 60s, the rest of the world actually marveled at this system because Americans did just that. For the most part, with few exceptions, they reported what they earned and they paid tax on it. And then gradually that began to change, and especially it started probably in the late 60s, early 70s, and it kind of built up in the 80s, and in the 90s it's just spiraling out of control. And the real threat here is that it could ultimately collapse the system, which would be bad for most Americans.
You write about that high rate of compliance in many of the early years, but recently the rate of compliance has dropped. What's changed that led to that?
Several different things have happened. One is you've had, a lot of it is right here in Washington. Congress, a series of Congresses have been systematically eroding IRS's ability to enforce the tax law. You've had Congresses for the last 10 to 15 years in particular packing the tax code with special interest provisions. The average person out there who might be inclined to pay their taxes and not chisel in any way thinks, well, gee, I can't give campaign contributions. I can't hire a high-priced lobbyist to go get me something from Capitol Hill. And so they're doing it for that reason as well. But a lot of it also stems from you've had a whole mindset in Congress that says the income tax is evil. We ought to get rid of it. We ought to get rid of IRS, all of which is very misleading. People might think that sounds good, but it really isn't going to happen. You're always going to have taxes, and you're always going to have an agency that collects those taxes. So that's been, we think, a real disservice to the country.
The co-authors of this book, The Great American Tax Dodge, with us until the top of the hour. Philadelphia is our first call. Good morning.
Good morning, C-SPAN. I know that whenever Congress does something reform, I'm sure that Bartlett and Steele are going to come out 2 years later and win a Pulitzer Prize writing a book on the re-robbery that Congress actually did, because it's something that they've done before. I'm sorry to see you guys left the Inquirer. You wrote that book back in the 80s when Reagan reformed the taxes, and Rostenkowski and all those guys got together. I think that's the one you won the Pulitzer Prize for. I'm not mistaken. But I called one of you gentlemen when you were working at the Inquirer, and I told you how that particularly affected me. And I'll tell you the story real fast. You showed how the Congress didn't describe the people who were benefiting. You showed how they described certain circumstances that affected only a person or a particular business in order to give the government largesse to these people. And At the time, I think it was Dan Rostenkowski put a line in the bill that allowed this woman from Texas to escape $11 million in taxes. Now, I found out not long afterward how Mr. Rostenkowski paid for that. I was laid off from work for the first time in my life, and 2 years later, or the following year, I got a tax bill from the government because it was the first time in history that my unemployment compensation was taxable.
Thanks for your points.
The caller has a very good memory. He recalled quite correctly what happened, and there were millions of people caught up in the unemployment compensation because he's correct. It had never before been taxed, and in that Tax Reform Act, they levied that for the first time.
Our guests, the caller made reference to Pulitzer Prizes. Our guests have won 2 for newspaper reporting. What were the topics?
Well, the interesting thing is both of them were related to taxes, totally different subjects. Back in the 70s, we examined IRS statistics and saw exactly who the IRS collected taxes from, and we showed at that time how much of the emphasis was on basically the easy targets, and many of the larger big fish were simply getting away. Back in the late 80s, and this was the series this gentleman referred to. It had to do with the custom-tailored tax breaks that Congress plugged into the Tax Reform Act of 1986, the ones that were very taxpayer-specific. And basically what we did was we went through that law and tried to decipher that language to see exactly who the beneficiaries were. And somebody later described us as dealing a little bit in Egyptology at the time, trying to figure out the hieroglyphics of this stuff. But it was a fascinating project for that reason.
Osage Beach, Missouri. Good morning.
Good morning. Say, I'd like to make a couple of comments on our economical situation, and I'm hoping that the guys you got on there could do something to level our level playing field for all taxpayers, not just for the select few which are special interests who contribute to the campaign. But I'd just like to just make a couple of comments about our economical situation right now. We're giving credit to Mr. Clinton and Al Gore's situation, and when we don't, if we would just go back to history, when Reagan was in there, he told us, and they trickled down and they laughed about it, but they called him, remember, they called him the dreamer. He'd been watching he'd been in Hollywood, but our situation right then, our planes wouldn't fly and our ships wouldn't ship. Until we got in there, when the Desert Storm situation come in, we reprogrammed. We had to reprogram and get in there, and we put those bombs right down their shirt collars. And
thanks very much, Missouri. Observation from either of you?
I guess the main issue you're talking about is the whole issue of trickle-down economics, and which has long been a very controversial issue. I think the only thing we would say about in terms of the tax code and what the book is trying to, the point it's trying to make is that many people might applaud the fact that the income tax is in trouble and that Congress might be trying to get rid of the IRS. But the point we make in the book is that as good as that might sound to some people who, nobody likes to pay taxes. I mean, that's a normal human response in this world. But if they get rid of the income tax and replace it with some of these other options, the average person is going to be hurt. They're going to end up paying a lot more. And those at the top who have already, over the last 20 to 25 years, seen their top rates reduced substantially, they would get, in addition to that, an additional tax cut as well.
Donald Bartlett, can you give us some history? When did the income tax come about? What led to it?
Well, what led to it, Jim just alluded to something about the possible replacements for the current income tax, and one is a national sales tax. And ironically, at the turn of the century, the government got most of its money from tariffs and duties, which were in effect a sales tax. Nobody called it that. And the great fortunes at the time were going untaxed, the Rockefellers, the Carnegies. And there was a real groundswell building that these people should pick up a bigger share of the cost of government, and that's what led to the income tax. There's a tendency to forget in the early years the income tax only applied to 1 to 2% of the population. It was very small, it was very rich, and it wasn't until World War II that it became a mass tax as we know today, and that's when withholding was instituted. And that's when the system really changed. But, you know, as we indicated, one of the most fascinating aspects of this is that during the 50s and the 60s, when that top tax rate was 91% on income over $400,000, most people paid their taxes. And now you hear all of this coming out of Congress, all of this complaining about high taxes. As Jim indicated, the federal tax really is quite low by historical standards.
The smaller headline on this book is How Spiraling Fraud and Avoidance Are Killing Fairness, Destroying the Income Tax, and Costing You. Our guest with us for another half hour as we talk about the great American tax dodge and cheating on your taxes. A libertarian is called from Tacoma Park, Maryland. Good morning.
Yes, good morning. Boy, am I glad to see you. One of the main reasons that people are trying to avoid taxes is because of the fact that they have gone up so much, and the fact that people who are at the lower end of the spectrum they're trying to put out that we're not paying any income tax, that we're not paying any taxes, and that's not true. We pay a fortune in payroll taxes, number one, and number two, the strong-arm tactics that the government is using. Every aspect of our life is now on public display. They've got to have our number for everything, and I'm just getting so tired. I am a liberal person, but I am getting so tired of the government having to know every facet of our life.
James Steele.
The issue you raise about payroll taxes is absolutely right, and the average person out there, the size of the payroll tax today versus really 15, 20 years ago is astonishing. Anybody who is retired today and has been retired for any period of time is absolutely amazed at how big the Social Security tax bite is out of most checks, especially if you're a self-employed person. And the issue of the tax burden for people, working people, many middle-class families, indeed, it is very, very heavy. But it is only that heavy when you really factor in all taxes, the income tax, federal payroll taxes, state and local taxes. In fact, state and local taxes, most places have gone up at a much steeper rate than the federal income tax. And when we talk about the tax rates not being high, we're essentially talking about folks at the upper end of the scale. They're the ones for whom taxes have been substantially reduced over the last, really, 15 years.
Big Fork, Montana, on the Republican line.
Oh, good morning. A couple questions. How much does it cost to run the IRS a year? Why wouldn't it be possible to go to some type of consumption tax, eliminating the bottom 10%, 12%, whatever really need help with that? Is my questions. Why do we have to have this system that punishes people that do very well so they get accountants and attorneys to do their taxes while I sit here and struggle through an easy form? Maybe I'm just a dope.
How much does it cost to run the IRS?
I don't have a clue. But he raises an interesting point. He's talking about two different things here. It is possible to make the income tax simple. It actually would be very easy to do that, but there's certainly no will in Congress to do that. I mean, you're talking about a tax system that generates millions and millions and millions of campaign dollars, contributions. And that's one of the problems. Congress has no commitment whatsoever to simplifying the income tax. It's not in their best interest to do it.
And he asked about a consumption tax. Consumption
tax is basically the national sales tax, which, again, historically, that's basically what existed at the turn of the century. There's a really popular plan out there to put a 15% national sales tax on, and we walk people through that in the book. And just imagine every time you open your wallet, adding 15% on. You buy a $200,000 home, add 15% to it. You rent an apartment, add 15% to it. You buy groceries, add 15% to it. And even then, it wouldn't come close to generating the required revenue, which means you either slash large sections of government. And again, there's probably people who would love to see that. But I think we need to look at what's really happening to government. I mean, you have a government now in which a lot of military people qualify for food stamps. Is that where we should be at this point in our history? So it's kind of simplistic to say, well, we can collect less revenue, cut government some more. Some really hard choices have to be made here on both spending and taxing.
Lamar, Missouri. Good morning.
Good morning, gentlemen. I hear you I mean, you're mostly interested in the income tax, but I wanted to ask a question. Isn't Social Security withholding considered a tax? And if so, I would like to follow up. But let me just add a point here, please.
Sure.
The representative of the state of Washington has perfect idea that you can't understand why I have to pay on my salary, a little guy, on the first and last dollar into this, where the people get above the cap don't pay taxes. Isn't that an evasion of? And if we could just collect from everybody that 6.5%, I think we could pay the debt off in just no time.
Well, unfortunately, much of the surplus is attributable to excess Social Security collections right now. And if we actually increase that, of course, there would be even more collections. But you're absolutely right. The Social Security, the old age portion of the Social Security tax, as opposed to Medicare, is in effect a kind of flat tax. It ends for folks now at roughly around $77,000 a year. Anybody above that doesn't have to pay it, which means the vast, overwhelming majority of Americans pay that tax from January 1 to December 31st. But anybody above that, anybody who earns above that, of course, at that point, the tax goes off. We're very concerned about this, and it's very interesting to us in this whole electoral campaign where people are talking about tax credits and tax cuts. To our knowledge, there's absolutely no discussion about the payroll tax, which is the most onerous tax at the federal level for the most number of people.
And, you know, his point, the caller's point, is absolutely right. I mean, for someone making $30,000 a year, basically they're being taxed. Their tax rate is about 15 times greater than the person earning $1 million a year when it comes to that Social Security tax.
Lincoln, Illinois, good morning.
Good morning. First, I'd like to say how much I appreciate C-SPAN. Then I'd like to comment on this income tax thing. We Americans don't mind paying our taxes if they were fair, F-A-I-R. We're tired of paying for Congress's mistakes and their little extras that they like to hide in their pockets. But if we had an income tax that was 10% across the board and everybody had to pay it, we would get the national debt paid off, and we wouldn't mind paying our income tax.
Well, I think we would like to see the income tax simplified. And in fact, we make a big section in the book about this, that the current income tax, the code, and the regulations that go with it total some 50,000 pages. We even made a rough estimate of the words, and it's like 25 million words and going north. So the complexity of the code and everything associated with it is a tremendous problem, and it encourages the whole issue of fraud and abuse. As for your suggestion on the one rate, the 10%, we like the idea of eliminating all deductions, all write-offs, simplifying the code, but we would argue for multiple rates. And the reason for that being, if you just put in one rate, a 10% rate, you're going to give to people at the top, once again, which has been happening systematically over the last few years, with a few exceptions, you're going to give those at the top a remarkable tax cut. And by historic standards, as we said earlier in the show, they're already paying at a much lower rate than they have most of this century. And you could put in multiple rates, which would mean lowering the first rate from the existing 15%, putting that down below 10%, putting the top rate, which is now 39.6, putting that above that. The rates themselves do not make the tax code complex. It's all the write-offs, the deductions, and all the regulations associated with them. That's the main problem.
One of the real problems with also the single rate is it'll exacerbate the concentration of wealth in this country, which is already it's worst in history. It wasn't that many years ago when it took 47 million people at the bottom to equal the income of the top 1%. It's now 100 million people. And Justice Brandeis phrased this really well many decades ago when he said we can either have great concentrations of wealth in this country or we can have democracy. We can't have both.
This is the book, The Great American Tax Dodge, How Spiraling Fraud and Avoidance Are Killing Fairness, Destroying the Income Tax and Costing You. Its authors are Donald Barlett and James Steele. James Steele grew up in Kansas City, was a reporter at the Kansas City Times before joining the Philadelphia Inquirer in 1970. And before he joined the Inquirer, Donald Barlett reported at the Akron Beacon Journal, a Cleveland Plain Dealer, the Chicago Daily News, and these two reporters have won 2 Pulitzer Prizes for newspaper reporting and are the authors of a number of other books on finance and tax issues. Davenport, Florida, good morning.
Morning. I think one of the problems that I have with this discussion is that it talks about the unfairness at the top end of the tax structure. And I think we're forgetting, or we're not talking about, and neither are the candidates running for president now, that the wealthy people are the ones who employ the small end of the scale. Secondly, when we die, we pay 55% federal tax on our estate, along with a, say, 7% state tax. This is money we've already paid taxes on. Then our inheritors turn around and have to pay 39.6 or 40% of that remaining money in taxes again, which means that we're paid over 80 cents on the dollar on taxes. And I think that when you talk about fairness, you have to talk about fairness on all of the ends across the tax structure. And I don't see that happening. I don't see people talking about it. We have been dealing with this right now in our own family, and we find that 82% or 82 cents on the dollar in taxes for the death of a loved one seems to be a bit much. But we.
Oh, thanks very much, Florida.
The estate tax is one of those issues that just has this generates a real heat to it. But the fact of the matter is, it affects fewer than 100,000 people in this country, fewer than 2 out of every 100 who die. And there was a great quote back in 1924. Andrew Mellon, the Secretary of the Treasury at the time, who really hated the estate tax because it was going to hit him very hard, said that if we keep the estate tax and we don't eliminate it, there will be, before long, no income to tax in this country. I think Andrew Mellon proved very wrong in that. And the estate tax, one of the arguments for the estate tax was to prevent the kind of inherited aristocracy that existed in Europe, and that was one of the arguments for it.
I think one of the other things to point out about it is that fewer people in general are paying it now than was true 30 years ago, when the rates were even higher than they are today. So again, the idea that taxes are at an all-time high is simply not true. I don't know the state situation there, but in terms of the federal level, that is not the case.
Point Eden, California, good morning.
Hello, guys. 2 questions. Why do we subsidize home mortgage interest rates? Second, couldn't the estate tax be eliminated if they also eliminated the stepped-up basis rule on capital appreciation on income upon death?
Actually, your point's really well taken on the mortgage interest deduction. That's why Jim and I both feel that the tax could be simplified greatly by eliminating all these deductions. And there would be a great cry from some people over this, but the fact of the matter is only 30% of the tax-paying population itemizes deductions, so those would be the only people affected, and you could adjust the rates in such a way that most of those people would pay no penalty as a result of it. So I think that point is really well taken.
Huntsville, Texas, good morning.
Morning, gentlemen. I've got a kind of a weird tax question. Do y'all know anything about the different articles and debates that have been in the paper about regarding the tax law, about there not actually being a tax law to file an income tax?
Very familiar with those debates.
What's he talking about?
He's talking about there's a school of thought out there that says the income tax is illegal. That the 16th Amendment to the Constitution, which paved the way for the income tax law back in 1913, says essentially unconstitutional that there is only one place that you can truly levy the income tax, which is Washington, D.C. This is a theory that's been around for a long time. It really has absolutely no merit, the income tax law. We may not like taxes, we may not like to pay them, but the income tax law was properly and completely not only approved by the majority of the states, which is required by the constitutional amendment, but then the law itself was enacted by Congress after that.
You mentioned Don Bartlett. You mentioned earlier about it not being universal until World War II.
Right.
At the time, was there some talk that, well, we'll make it universal for the duration of the war, and then after the war, we'll cut back? Was that ever talked about?
You know, I don't remember if that was talked about at all. I don't, not in the terms of the universality of it, I don't think so. Maybe in terms of rates.
I think in terms of rates.
Rates may have been, but not in, I think at that point it was decided that the income tax was going to be a mass tax, and this was going to provide the main source of revenue for running the U.S. government.
And at the time it applied to just very few people. And I think that's what is not known now. It really only affected the rich. And it really wasn't until Don says World War II where it became the mass tax that we know today.
Lansdale, Pennsylvania. Good morning.
Good morning. The other fellow that brought up the issue of the 16th Amendment being unconstitutional, I don't think that means anything, whether it's constitutional or not, because the income tax law is correct and lawful. The only problem is, if you go back to the 1939 code, which was brought forth to the 54 code, it applies to government employees or people who are in what's called a taxable activity. Most Americans are not in that unless they work for the government or are corporations that are part of the United States government. And if it's actually easy to find. It's not complicated. Just go on the web, look at the law, and read it. And it applies. It says who the employers are and who the employees are.
I think we would just have to say that any number of legal decisions have come down on this issue, and they do take the position that the income tax does apply to everyone, not just government employees, but across the country as such. So it is our position in the book that the income tax, while nobody likes taxes, nobody likes to pay taxes, and what concerns us is the fact that people are not paying really what they owe. And the reason they're doing that is in part because of many things that have gone on here in Washington in terms of the special interest legislation, in terms of what they've done to the IRS. And the difficulty with that is that all honest taxpayers who pay their taxes and who have them deducted from their paychecks, they're going to end up subsidizing everybody else to pay for government. And that's what concerns us the most.
In looking at who some of these folks are, your first chapter is titled The Tax Cheat Next Door. Is it that common?
Absolutely. We figure it's probably 1 in 3, approaching 1 in 2. And, no one really knows for sure. But what's fascinating about this, if you went back in time, and as Jim indicated, we've been writing about taxes for the 30 years we've been working together, and I was writing about taxes before then. When you would go out and interview someone about taxes and the question of cheating came up, you very seldom say, well, I know somebody who's doing that. Now you interview someone and they'll say, well, I can tell you so-and-so, so-and-so, and so-and-so what they're doing. And it's a reflection of once somebody cheats and gets away with it, then they tend to repeat the practice. And as more people do it, more people know that other people are doing it. And that may become anecdotal, but there is also strong statistical evidence to suggest just how deeply and how widespread it is.
Helena, Montana. Good morning.
Hi. Thank you for taking my call, and I really appreciate C-SPAN. My question is this, if a person was living in society and going around robbing banks and that sort of thing, I would think that the person would have consequences in their life, like, bad things would happen to them, things wouldn't work out, and that sort of thing. And have you done any kind of study that these people who are evading $300 billion in taxes, that they're paying in other ways? They're cutting the corners that they're doing is and the resulting not living up to their responsibility to society is causing them bad consequences in other ways.
This is a very interesting question you raised, but I'm afraid it was beyond the immediate scope of the book. We had enough trouble finding some examples in terms of actually physically put the names in the book. The sheer volume of people out there doing this and the sheer numbers of them are significant. You may be right. There may be an opposite reaction to every action out there, but I think what we found time and time again is that most of these people who were getting by with this were living quite well or had somehow or another managed to elude the system. I think what concerns us the most is that if you do not have a system in place where people know that you can't do that, you're going to create a bigger and larger pool of people committing fraud. And it's just as Don was mentioning a minute ago, years ago you wouldn't know that many people who did this. Now almost everybody knows somebody who's doing it, and they realize that that person hasn't been caught. And the larger that pool gets, the more will do it. And you couple that with the frustration that people have over the tax system, its complexity, and what Congress has done to it, that's a prescription for real trouble.
Does the caller's question go to the difference between tax evasion and tax avoidance?
Yes, it does. There was a great quote from a national tax magazine, this goes back to 1928, the National Income Tax magazine, which evasion is an illegal act and avoiding taxes, and avoidance is a perfectly legal act. And the magazine made the point that there's this line that separates between the two, but it becomes blurred at times, and it's hard to distinguish. We would argue that line now is, in some cases, a black hole into which a lot of people fall, because, again, of Congress's unwillingness to deal with this issue clearly.
Lexington Park, Maryland, good morning.
Yes, good morning. How are you?
Good.
Good morning.
What I wanted to just bring up a small point. The tax situation is so broad and multifaceted right now that it's just incredible to get into all the different areas of it. But just one point, as far as the fair tax, what I think the sales tax, to me, is the way to go from the information that I have been reading about it. For instance, let's say that you go to a store and you purchase an item. The item costs $1 right now, and you have your 6% sales tax from the state. Okay, but now the government tax, if you are going to have a sales tax from the national level, okay, let's just say 15, even 20%. The price of the merchandise has to include, right now, at this point, before any change is made to the tax system, the fact that there's going to be taxes taken out for workers' comp, for this and that, and also the fact that the workers are going to have to pay taxes on that. Whoever buys is going to have to pay the tax on this. Now, if you don't have to, excuse me, I'm getting a little bit nervous here. Now, the government says you pay 15 or 20% onto that. Now, therefore, that's also going to make that merchandise initial price at the store level be less, because the manufacturers and merchandisers do not have to tack on all the taxes which they know are going to have to be paid, that they're going to have to pay. So therefore, the price is already higher. So the dollar item would, in essence, go down with the fair tax, because it's not going to require that the manufacturers and the distributors pay that tax like they have to right now with all the taxes that are included in the system.
I think we would disagree with the idea that if you bought such an item, that it would be cheaper under that system. I think even if you had a 15% sales tax, and let's say you added that to a 5 or 6% sale tax in your particular state, that would be reflected at the cash register, at the credit card. There's no way around it. It's true there might be some other small tax here or there that works out into the cost of that good, but the big hit would be that national sales tax. And the point we make in the book, this is a decision for people to make, but the sales tax, which sounds superficially so simple and so appealing on the surface, like you just pay for whatever you buy, the question is, for the average person, does this work out right? Yes, they can decide whether or not to buy shoes for their children. They can decide whether or not to buy food. They can decide whether or not to buy clothing. That's true. They can decide whether or not to make those decisions. But all of those things would be taxed. We also computed, and we've heard the argument that a sales tax would be any wealthy person buying a $100,000 Mercedes. They would be paying $15,000 on top of that. The question is, and we ran these numbers out, and they show up in the book. We took everybody earning more than $1 million, everybody in that category, according to IRS statistics. Everybody in that category, if they paid everything in a national sales tax as opposed to their current income tax, they would receive roughly almost a 50% tax cut. And of course, we know it's physically impossible to spend everything you make. Those people would be saving something. So it depends on what people want. If they want to give people at the top a substantial tax cut, then they should go for a sales tax. But for the average person, there's just no way around it. It would be a disaster.
The other aspect of this is it's not just buying products. The most popular plan on Capitol Hill also applies to services. So add 15% to your daycare bill, add 15% to your telephone bill, add 15% to every bill that comes into your house that you write a check for. It's not just the products you buy, it's also the services you use.
Next call is Pittsfield, Massachusetts. Good morning.
Yes, thank you. I would like to know if an American is working for the United Nations, do they pay income tax to the United States?
Good question.
Good question, Jerry.
Good question. I'm not sure. I'm not sure I'm going to try to answer that. I guess
we'll look into that for you. If you'll send us a note, we'll be happy to see if we can get that answer for you. But
which reminds me, if someone reads this book or is watching this program and has information that they think you might be interested in, how do they get a hold of you guys?
We work for Time Inc., 1271 Avenue of the Americas, New York, 10020, and they're happy to write us there, and we'd love to hear from you.
For somebody that just dived over to their desk and picked up a pen and pencil and paper, the address again is?
Is 1271 Avenue of the Americas, New York, 10020. And they could write to either one of us there, Don Bartlett or Jim Steele, and we would very much like to hear from you.
Donald Bartlett and James Steele, the authors of this book, The Great American Tax Dodge, with us for a few more minutes till the top of the hour. Houston, good morning.
Yes, there's a couple of things I'd like to say. First of all, the gentleman there kind of left the impression with me that they were saying that no one paid Social Security tax if they made over $77,000. Is it correct that they pay Social Security up to the $77,000, and after that they don't pay any more Social Security? And then, is it true that like 1% of the population pays about 40% of the federal income tax, and then about, just keeps on going down like 5% or whatever, but down to about 50% pays about 90% or 95%, then about 50% don't pay any tax at all.
This is a good point. You're absolutely right on the 1%. 1% pays about roughly a third of the income tax. But remember the other number, 1%, the income of that 1% equals the income of 100 million people at the bottom. And that's a gap that's been growing, and it's a gap that does not get enough attention. On the Social Security tax, the 6.2% this year ends at $76,200, and any income above that is the Social Security, the payroll tax does not apply to.
Where's all this headed? What if nothing's done?
If nothing is done, you're going to see increasing disenchantment with the income tax. You're going to see much more fraud and avoidance. And there are some people, frankly, in Washington that wouldn't displease them at all. Some people are so unhappy with the income tax, they would love to see the income tax collapse of its own weight. And that's what we fear may happen. You're going to get more and more people committing fraud, the burden falling on more and more people to pay, more disenchantment on their part, them finding ways to escape their obligations, and then the call for some replacements, such as the sales tax or the flat tax.
Before that happens, what would you like to see happen?
Well, one of the most disturbing things that's been happening in Washington in the last 10 years in particular has been this attitude that all government is bad. And Jim and I have written about government for 30 years, the things that are wrong, the things that are broken. But there's never been we've never suggested you destroy the government. You fix what's broken, you fix what's wrong, you don't dismantle it. And that's really what's happening in Congress. For the first time in history, you have a chairman of the House Ways and Means Committee, which writes the tax law, saying, I want to see the end of the income tax. Never before in history. You have a large number of members in Congress who are really committed to a national sales tax, which, as Jim indicated, sounds really nice on the surface, but when it's implemented, it will, ordinary working people will, in a very short period of time, discover that it's no panacea at all.
Shelbyville, Tennessee, good morning.
Good morning. I'd like to ask of the gentleman called earlier about 86% taxes for someone who passes away for the upper income brackets. Now, I'm familiar with a lot of trusts that are overseas and ways that people can avoid these taxes. How much of the upper echelon is avoiding these taxes by implementing these, strategies, and how much is it affecting us?
I don't think, this is a really good question because I don't think anybody knows how many people are doing this lawfully, and you can do it lawfully. The point, this is a two-pronged area, and it goes to the heart of the complexity of the tax code and the estate tax. People who can afford to hire the accountants and tax lawyers can pretty much avoid the estate tax if they want to. It's the other people who don't have that expertise or don't have access to that expertise that really get hit by it. And in some cases, there are indeed some small businesses and maybe even some farmers who are put in a very difficult position with the estate tax. But people at the top who really want to avoid it can do so.
St. Joseph, Michigan, on the Republican line. Good morning.
Hi there. A couple quick things, I hope, anyway. The question was asked about the cost of the IRS to take our monies, I guess. A few years ago, I heard a so-called authority speak to that, and it was either $3 to collect $1. It cost the government $3 to $5 per dollar of revenue taken in. Now, I don't know how true that was, but it was alleged authority. The second thing, where would you break down on this income tax if you were to break it down into a fixed income tax for various levels?
I don't think we would have the exact income groups at this point. Obviously, you exempt a lot of people at the bottom, just as we do now from the income tax part. But we would like to see that first rate, which is now 15%, move below 10%. And then we would like to see a series of perhaps 6 rates thereafter. But putting that top rate certainly in excess of 50%. And it's now 39.6%. Now people might say, oh my goodness, how horrible. The fact of the matter is, as recently as 1981, the top rate on unearned income was 70%. As recently as 86, the top rate on earned income was 50%. People don't realize that top rate for people making perhaps $10, $20, $30 million, it hasn't been this low except for maybe a 4 or 5 year period in our nation's history. So we would like to see a series of those rates, eliminate all deductions, eliminate all write-offs, make all income tax the same. If you sell stock, you should be taxed on the gain of that stock, just the same as you're taxed at your job. Make everything fair from that standpoint, and you could also eliminate an awful lot of the paperwork, an awful lot of the complexity.
James Steele and Donald Barlett are the authors of this book, The Great American Tax Dodge, How Spiraling Fraud and Avoidance Are Killing Fairness, Destroying the Income Tax, and Costing You. Thank you both very much.
Pleasure being with you.